So we've all seen this 66 PE plus 1. Here's what I've been talking about for all this time.
Now describe 66p plus 1. What does this mean? Oh, for the presidential election plus 1 year.
Yes, it's a
Okay.
66 days
Mm-hmm.
and starts Monday at closing, and it hasn't failed since 1973. And 1973 was the Arab oil embargo, which
Mm-hmm.
uh,
So how long was that downdraft? That downdraft was, wow, that's pretty significant.
was very significant in 1973, but it's never missed after that from
Okay.
10/27, which is Monday, until end of the year.
Okay.
But the most interesting part, I think, oh, what did I do with the, I just lost my pen. Oh, there it is. I mean, I have to do, now it is. The most interesting part is this, when we go to S&P 500 stocks, where we
Mm-hmm.
look at everything here. And then I can look at next 30 days or next 60 days. How about
Mm-hmm.
next 66 days? And then when we look at the bottom, it found 157 opportunities. 98% of them are long, 2 shorts, 155 longs, and these are between 2 and 66 days. Well, hi, Charlie.
Hi, Afshin. How are you?
Great, thanks. Thanks
Hi,
for
Anne-Marie.
joining.
Hi.
Charlie is one
It's
of
nice
my.
to see some faces.
Carolyn's here too.
Oh, hi, Carolyn. Charlie and
Love
Carolyn
it.
are one of my friends, very close friends
Awesome.
locally. So this is what I was talking about right here, is that TradeWave have found 98% of all opportunities between 2 and 66 days for rest of the year to be long. And if I click on average profit, you can see some of them are significant, like
Mm-hmm.
Broadcom is a 17%
Yeah, we are
gain.
in that trade still.
Schwab, 15%.
Yeah, that's an
And
interesting one.
yeah, there's one I put on GWW. Oh, and this is, I'm sorry, this is October 24th. If I go to 27th, you actually see that it's even more. 225 opportunities, 224 longs. This is for Monday.
Mm-hmm.
So
So let me play devil's advocate here, if I can.
please,
Let's shake the tree a little bit. Let's do the inverse ranking on the averages. Let's look at the weakest upshot, right? So let's turn it, yeah. So let's see if these guys belong to a sector, um, a
Tyson,
structure, what is TSN?
Tyson Foods.
Tyson Foods. Okay, so they're like the chicken guys, right?
Yeah,
Them and Pilgrim's
exactly.
Pride.
And then
Chicken guys.
Target, who just laid off 1,000 people.
Right. Interesting. Interesting. I saw that. We had a few layoffs that got
May I
reported.
interrupt for a second?
Of course.
If you do this approach upside down, these are average profits, for example, for 13 days, for 1.5%. So this would be way more down the list if the days would be longer.
Exactly.
There's some missing.
Exactly.
That's what I suggested to Afshin, some annualized return or something to have this. Yeah, you know what I mean, right?
Yes,
Yeah,
for
absolutely.
sure. That's obviously time on our hands.
Hey, and if I'm a quick question, do you remember I told you I was listening to Aston and I had him click that little up arrow or down arrow next to Sharpe ratio
Oh, this one. Oh,
opportunity
okay.
charts there, and it showed all of the different trades at one time. You
Oh,
remember?
that's what you were talking about.
Yeah, so what does that mean? What are we saying?
See, what happens is that TradeWave finds
Okay,
every
okay.
opportunity
Yeah, I
for
need to find that because we can't, that thing really helps. Okay, thanks.
Okay, explain to me what the up down arrow does.
That was the days when you are supposed to have some hedge fund trader to trade with him. Okay, okay, I can watch that video. Yeah, I missed it then. No, I know where that is. Yes, thank you.
Yes.
Right.
So take a look at this.
Okay, thanks,
Yeah.
Anupam. He's got they're doing something pretty good on it right now, so I'm going to get back to it. Thanks, buddy.
I'm not sure he was talking to us.
Yeah,
Yes,
I don't
yes.
know.
I will
Neil,
get
your
back
mic
to it.
is on.
Thank you.
I can
Bye-bye.
put him on mute.
Yeah,
I think
just
that
for,
was key.
yeah.
Okay. Yeah, I was trying to figure out what he was telling us.
Yeah, so
Um,
what?
So what this does, for every day, there's more than one valid opportunity for every one of these. So as you can see, the number of days are different for every one. But if TradeWave showed every possible opportunity, then you would have to go through 5,000 opportunities all the time. So
Yeah.
what TradeWave does is finds every opportunity and then picks the one with the highest Sharpe ratio and shows only that one.
Okay, so I don't understand the clicking that gets me there. So
It's
what do I do first?
it's this button.
No, I see that it's that button, but when I click it, I just see the things that I see when I've got my regular stocks. It doesn't, when I click that button, then what do I do next?
Oh, nothing. It just, I mean, look at the bottom left. The number of opportunities just go through the roof. Right now it went to 2,833.
All right, so let me replicate what you're doing. I hate to be a pain in the neck, but I do want to understand this. 2-66, and then 27th, and then okay, and then rank it by the ticker.
Right.
Okay.
Or-
So if I'm looking for a ticker,
So if you actually search for a specific ticker, let's say Abbott,
aha,
if you just type Abbott in the filter,
okay,
and then you see only opportunities for Abbott, and they are all different number of days, but they all have different Sharpe ratios. So
okay,
this is what TradeWave picked. Highest Sharpe
okay.
ratio, 1.43, and that's the only one it shows you. Unless you
I
click that.
get it. Gotcha.
Yeah, in the beginning, I usually don't show this until people get used to it. There's just so much information in TradeWave. I don't want to
Right.
overwhelm people more than necessary.
Okay. Gotcha. All right. I got it. Okay.
Perfect. I just wanted to, so that's what I was showing, that TradeWave only finds long opportunities right now, unlike very bearish time of the year. For example, look at the 17th of September. If I say 2-30, 100% of opportunities are short. So that
Right.
itself is an indicator that next 30 days is generally short.
Right.
So,
And, on the flip side, the one thing we have to remember is seasonality works in our favor most of the time. And what happened for September overall this year was relatively strong. We only had 2 short days, essentially, right? And
Yep.
so our when we're staring down opportunities, the reason that I went to that, hey, let's do this rotation backwards and see where the weakest of the strongs were, taking a look at it like that, I wanted to see if there was a particular sector that we were
Wasn't as
looking at in
strong.
general. And it it could be it could be consumer discretionary that might.
Yeah. So the way I usually look at the sectors is I look at their ETF.
Okay.
And for example, do you know a ticker for consumer discretionaries ETF? The top of your head? I don't remember these. I usually have them written down. I can check.
Hang on. There have a couple of them.
XLF?
No, XLF is finance.
Oh.
XLY.
Okay. So XLY. So here's XLY from today until, actually, we can just look at it till end of the year. By the way, for any day, you can go here and say year to end of today to end of year, and it just goes to 12/31.
Okay, and we did have the drawdown on, after the monster rally up in 2021. And so, yeah, and what was the fade there?
Well, I'm sorry.
The fade on for 2022, the drawdown.
Oh, okay.
What was that total number?
That's 9.42 plus 2.22.
Okay.
So about
All right. Very
13%.
good. Okay. All right.
12%. So that's how I usually look for the sector itself, instead of unless it's like Dow Jones Transportation that I have the index for a ticker. By the way, transportations are very strong from now until end of the year.
Interesting. And what the transports are K?
I can just look at if I go to indices and just do DJT.
Yeah.
And you can see that. And if I look at this PE +1, you can see that it is a very strong up for the year after presidential election years, right there. And then for individual stocks, I have CSX is. Look at that one. Look at how strong this move is. And it starts on Monday. Exactly. See this?
Yeah, looks good.
That's CSX. For basically, this is P +1 for CSX. Since 1981, it's just been up.
Yeah.
An average of 8.89%. CSX is not a volatile stock.
Yeah, that's true.
So options are
very true.
cheap. But look at this. You can capture 9% or more.
Yeah.
So anyways, I just thought this was a pretty interesting context.
Yeah, let's build let's build some trades together. What do you think?
Yes, absolutely. I think
All right, so
all of
let's
us,
go to that
including
list
me,
again.
looking forward to it. Would you like to drive?
Yeah,
or
let's
would you like me to?
I would like to share in a sec, but I would like for you to go back to that list and stack rank it for me in terms of what should we stack rank it on? TradeWave. Let's do the TradeWave. Yeah, there we
Ratio?
go. The ratio. So DGX, I don't know what they are. What is DGX?
DGX is
Quest.
Quest.
Oh, okay. All right. 40 days, ADSK. We'll do a rapid fire here.
Yeah, that
And
is a good one. And for example, if I want to trade something, I just put it on a portfolio. Right now I have selected the portfolio named October for myself, and I just add it so I keep track of it. But another really interesting one that I actually did a trade,
holy
but I thought about it.
smokes.
Look at this. This is W.W. Granger. And
Granger, right? Yeah, I
look
know
at
these
that move.
guys.
Granger is going to announce earnings next Friday on the 31st. And
Okay.
look at their price, $964 as of close yesterday. Their options are not very expensive because implied volatility is not, they don't usually jump up like they do right
Yeah.
here. So options aren't super expensive. And I'm going to do a ratio of expert on this one because this can jump. Look at this, 13% last year.
Yeah.
13% in how many days? 17 days. That's $130.
Now that's a lot.
So
High touch solutions. Safety, security, material handling, storage equipment, pumps, plumbing equipment, cleaning and maintenance, metalworking, and hand tools.
very boring, yet
Yeah,
their stock
that's
goes
good.
through the roof
Boring is good.
in the next 18 days
Yeah.
or 17 days. One thing about TradeWave, I've found so many stocks I never heard of before
Yeah.
because they just popped up like this. I
Yeah.
didn't know they existed.
Yeah.
Anyway, I really like that one.
All right.
I'm going to
So
do a ratio back spread.
now what I'd like for you to do for me is do a sort on the number of days from high to low, not low to high, high to low.
High to low.
Yeah.
By the way,
And
I did
let's
2-66. So these are
Clorox. Yes, for
opportunities
sure.
less than 66 days. And
Yeah.
it's as of today, not Monday.
All right. So let's take a look at. All right. So December's expiry is 56 days. And so Jan is 84 days. So if we take this, if we take these, we'd if we chose January's expiration, we would need to close it out by, say, the 29th, so that we would have, you know, the 66 days per se, right? So we'd have closing dates for December 12/29.
I mean, 12/29 would be the latest you want to do it before
Yeah,
time value
well, that's what
starts.
that's what I'm saying.
I
Yeah,
mean,
that's what
I
I'm saying.
usually close it by then, even if I'm losing, just so I don't hit the time value.
Okay, gotcha. Gotcha. All right, so let's see what else we've got. Nucor, that's steel, J&J, that's consumer staples, Delta Airlines, they've been doing fairly well.
Oh my God, look at the average in 48 days.
Yeah.
Delta Airlines has been going up.
Yeah, Clorox too. I find that to be
Yeah.
super interesting. A lot of low vol stocks, which tell me that we've got just an all-in general buying space to watch. What we have to figure out is, can we get it on the cheap? And most of these are saying the 54 days. So let's choose December expiry. And then, I don't know, we might need some time value. So let's sort of settle on January. And then We'll figure out which of these works. FDS. What is FDS? Fact set. Okay. What a list. Okay. All right.
Have you ever heard of that? I never heard of
I
these
have
things.
fact set research. They have a lot of data that I read that's macro data. They
I see.
put out fact set puts that out. Okay, Accenture, that's ACN Deckers. DR Horton. So that's DHI, or is that Darden Restaurants? I can't remember. That's DRI. DHI is DR Horton. Yeah. Okay, so let's take a look at the top view. What we can do from what I'm going to share today is you can go in and morph and choose things that go that way. So I'm going to ask if I can share. Oh,
Absolutely.
look at that. Okay, and let's go to the charts first. We can look at this GW Granger. It's been sitting, this is a pretty big channel, right? 887 to 1100. So it's at the almost at the floor of this support action event. So we're looking at about maybe $200 of range, and it's got earnings on the horizon on the 31st. So let's see how they behaved during the week of earnings for the last time. This fade into support, this a bounce that moves into resistance, this a fade into support, this a bounce out over the space, this sideways. So from an earnings perspective, over the last several earnings event, it's been a little bit of a hit and miss in terms of how traders have responded to them. We've got momentum that's essentially flat. This sort of thing is going to make the option fairly cheap. So if what is the average upside for Granger? It's what?
You mean GWW, right?
Yes, yes, yes. If you could share that with me.
Yes.
Vol's pricing in an $87 move, which is not much.
8.49%.
What?
8.49.
Okay, so
And it's
let's
17
round
days.
it up to oh no, that's about $87. So implied vol is got that priced from historical motion. So that's pretty good. All right. So if the average is say 87, if we went up here and we added 87, that's 1,000 and my brain.
80.
What, 1,050?
80.
Yep. 1,080. Sounds right.
1,080? All right.
Hey, what's
By
going
the
on?
way, the trade
right there. It's just over there. My watch.
Okay, what were you saying, Afshin?
the TradeWave average, which includes the light green part,
Uh-huh.
is 10.5%.
Okay. So
So I use 10% to approximate what I would expect. And last 4 years, it's gone up more than 10%. Last year, it was up 13.91%.
okay, so if we do, these spreads are awful. You could drive a bus through it. So not great, but what we can do, if we do it your way, where we move, if we buy a back ratio, right? The break even, you got $1,000 of risk total. Well, 1,800 because you're buying this. And so if it moves to the 10, it would literally have to move to 1072 for you to start making money. And if they are anticipating 1080 and TradeWave gives you an average of over 10%, then you're looking over 1100. So this back ratio, it's green, so it's a buy for that back ratio. That's obviously something that can be done. Not particularly
Well,
something
that's,
that I love, but
I don't do these like that because that actually is very expensive. These things don't work very frequently. The way I do it is that I don't go for January. I will go at the maximum December, but I would even try November on that one. I go for quick in and out, and then the one I sell is usually around at the money, and the one I buy is slightly out of the money until I hit a credit.
okay, so you would say, so here, if I can, how about we do this with the screener instead? Why don't you take the screen back? And if
I-
your thought is
Yeah,
quick hit, no, hear me out. Hear
I
me out.
don't. Oh, I'm sorry. Go ahead.
That's okay. If we are looking at a screener that says, listen, do this for 66 days, and you're going to have this return, to statistically move with the particular rotation we have, we want to fit as many of our trading parameters into what TradeWave is telling us.
Right.
Now, if we say, hey, let's tighten up those days. If we're planning on, November's only 28 days away. So if we position ourselves here, what we must see from TradeWave is a rapid acceleration in those 28 days, and then it becomes viable. So the call wall sitting here is 990, right? We've got 1100 open interest right here. That's the call wall. The put wall is, there's nothing there. There's no real put wall in place for a downside pressure event. So the only, and this is good that we're having a conversation here involving rhyme and reason. And for me, because I love TradeWave so much and because I watch it work, if I buy something that doesn't give me the time horizon that TradeWave is telling me I should have, then I'm actually not following the statistical probabilities. So I bet that we could still have those motions, because what I'm actually using is the actual probabilities that they move to see where we can go cheapest. Now, in truth and fact, this one is too expensive because there's no volume sitting in most of the chains. However, if we go to November, we are seeing volume, and we are seeing a place where the call wall is. And so we could easily go to the call wall and do what you said. And if we go slightly in the money and then out of the money twice, but if you want to go to a place that it gives you a credit, let's see. If we go here,
Yeah, you're still at 1060. Oh, I see, I see.
Yeah, so if we go here, we need to collect at least 30. And that's going to be way down here at 1010. And that's well over what the chart is telling us is likely because of where this call wall is sitting.
Right.
Now, if we do something just a little different using your same strategy, and we go, okay, let me go just outside the money and then go to the call wall. Yeah, that's still, I'd have to go outside the call wall.
Yep.
And it's still going to give me a debit. It's very hard to get a credit that way, particularly with these guys. Now, here's something very good that you can do. And I like this function for the following reason. If you're so inclined to go after this, and you use the December, let's say you go, hey, I think that one said 56 days anyway, right? And so you go into December and you say, you know what? Wow, these options are expensive. Holy smokes.
I mean, it's $1,000 stock.
Well, not only that, the spread is what makes it expensive.
Oh my
See,
God.
I
you're
can look to
right.
Netflix.
$7?
Yeah, I can look to Netflix, and when I take a look at the spreads, right? Same $1,000 stock. I mean, that's $1,
Wow.
right? So the spreads make GWW2, though that's
that-
not a good stock to use options with, right? In terms of
Yeah,
broad motion, it's just not, unless you do something like a short put spread. You could easily do that.
Yeah. I don't think we should do the idea that I had on this. You should do your own
Yeah,
your
but none
strategy.
of my strategies will fit into stocks that have spreads that are this wide. So this would be a pass for me because the risk between the bid and the ask is very high. It's
Yes,
very, very high. So
yeah, this I
although it
didn't.
might be fantastic to look at, it would be tough to trade unless you found a chain, you found in the chain real volume somewhere, right? Here's 500 here at 980, and then 200 here at 1,000. But that's still, I mean, you're paying half the size of the spread. So not a good risk to reward. All right, let's check another one out. Let's go and recap Broadcom because that one is going very well. Last time we were together, we talked about putting this trade on. It has done remarkably well. It's sitting in a range formation and it's still allowing us opportunity to take the position. So for the butterfly, I like to use the butterfly. There's a butterfly 370, 390, 410. For a butterfly, you buy one, you sell two in the middle, you buy one on the end. These are both going fairly well. This one's up about, I don't know, we talked about this earlier. This one's up about 30% or so. And this one is also up about 30%. So if you haven't taken these, there's still time to run with these particular instruments, right? So the back ratio that I took, the 400, 420 into December, I got a credit of $3.22. It's a little bit underwater, but I don't really care about that simply because it's nowhere near my 420 call strike. And so I'm leaving it alone. If you are so inclined, and this doesn't, if it makes you nervous, don't take it. But if you're okay with it and you go, hey, I'm going to put a marker on this when it gets to 400, I'm getting out of the trade, or whatever you want, right? There's also a put spread here at 280, 270, and that one is doing very well. That one is up about 50%. So if you wanted to do another put spread on this one, because it's so strong, let's see where support sits for Broadcom. I still like the 290, 280, 290. So you could do, if you want to do another one, you take the credit off of that one, and then you take the 280, 270 short spread. It gives you another $1.05, but you can do it. And you could also go outright and buy the 380, 400 call in December. You take it off beforehand, but that is, I believe it's sitting pretty near the call wall. It's just over the edge of the call wall, and they are pricing $60 into this. So, 410 is probably where it might head in general. So it's really a pretty nice trade if you just want to go ahead and buy that spread. It's now up at $6, so you might want to choose the 390 to 400 spread as your choice. You can do that. A lot of different ways to trade that. My role as I manage my accounts is the following. Can I position myself for upside at the cheapest possible point that I can? And if nothing happens and we literally go sideways, do I not suffer a drawdown? That's what I'm looking for. And so positioning like this with a combination of credits and debits give me directional motion, and it's far away enough that if things go off the deep end, I'm still not at risk of having things blow up on me, right? And so that's really where this one sits. I want to take a snapshot of this in general for us. Let me do this. All right, let's do that. Okay, so the next one, let's take a look at CSX. I think rail transport is going to stay very important. The chains here are, let's see what these chains look like. Who's dancing around here? Today's option stats. 5,000 calls, 750 puts. Okay, so not great, but we could probably work with that. So here we are with CSX. Wow, it has been literally sitting in a range since 2020. And so the range, it's at the top of its range right now. Seasonality tells us that it normally has a run up into the end of the year. And so we can see that. We see the bounce in November moves off a little bit. The bounce, November, October moves up a little bit. This one also bounced. This one bounced. This one, not so much. Last year, it fell off. And then this year, here we are sitting at the top. So as a technician, my first thought is, hey, I'm sitting in a pretty wide range here. So if this breaks out, it's going to challenge a 1, 2, 3, 4, 5.5-year formation that's moving sideways. Now, that being said, you know, it was sitting in this box for 2.5, 3 years. It sat in this box and then it moved out and continued to rise. So let's see what the option chains tell us here. If we go to December, Afshin, would you remind me what the average percentage is? If you could give me the median versus the mean.
Sure.
Thank you. Golly, these spreads are awful.
Yeah, they are very low
Yeah,
volume.
plus no volume, but
Yeah.
solid open interest. People they're buying these
Mhm.
formations, just not today. They're just
Yeah,
not doing it today. So these might be trades we put on Monday.
Yeah, Monday might be the time.
Yeah.
for
So
this.
what's the mean on CSX?
The median is 8.25%
Okay, that's
for next
pretty
37
solid.
days. This is not
37 days?
year.
Oh, shucks, that's why I'm seeing that. Let's do it the right way. Let's go to, it's at 37 days. So let's look at November. That's perfect. 37 days. This one's given us 28. So the rise has got to be fast, right? They are over the call wall.
Oh, I'm sorry. I was not having CSX on
Yeah. No
plus 1
worries.
year. On the P plus 1 year
Uh-huh.
from Monday until January 6th,
January 6th. Okay.
you have a very strong up move at
Uptrend.
average of 11, almost 12% with a median of 10.66.
Okay, so the great thing is that this 37.50 call is absolutely very cheap. Very, very cheap. The deep in the money calls, which you can often offset if the spreads aren't so gigantic, but this flat out call is really, this is just as good as anything to buy. Now, potentially, if this chart dips because it's at the top of this range, right? Simply because it's there and it's keeping itself landlocked here. Let's see if we could sell a 30 put. No, we can't. Not for December. Let's see if we can do it for January. No, nothing. Nothing there. So yeah, the flat out call there, you know, the break even would be $38, which is $2 away. They're pricing into December. They are pricing in $2.50. So that's $38.60. So this might have some intrinsic value, about $1 of intrinsic value. If it runs really fast and it moves into the money, it could easily be a $2 position. But if we just go flat out long, that's just as good as anything else. 326. If we bought yeah, we just don't have the spreads for it. Yeah, so that would be the easiest one out of the bunch to do. If you wanted to flat out buy the instrument, you could
Sell the calls.
yes, you could protect the downside with selling the calls at you'd have to go far out to get anything here. It's just pretty awful. You could sell the 40 calls if you bought this and then you sold the 40s. You'd literally be getting in for $35. And if you had to surrender the stock at 40, that's pretty nice, right?
Yeah.
That's pretty solid. So we could definitely do that. That seems reasonable to me in terms of those two spaces. All right, let's try another one. Let's go to Autodesk. That should have a lot of volume floating around. Look at me. I haven't traded that one since June. All right. Let's go over here. Let me erase my drawings. And then after I do this one, let's open it up for questions and talk maybe a little bit about how we can probe Afshin's knowledge of what TradeWave delivers to us with what we can do with our option spaces on the horizon. I think that might be a nice way to end that, if that's okay with you.
Perfect.
All right. So this is at the top of the range. We've got earnings coming in on the 25th. If you could tell me the day count for Autodesk ADSK and the median return.
It's 24 days, and the average is 7.88% with a median of 6.9%. So
Okay, around about 7. All right. Okay, so here we are sitting. There's some people might call that an inverted head and shoulders, but I don't really like using
Yeah.
those kinds of patterns. I find them to be most unreasonable. So
yeah,
the
but this time's
floor-
gonna work.
Yeah.
The inverse head
Yeah,
and
rarely
shoulder.
do they work. So I have a support leg. I do trade Autodesk quite a bit. I just haven't traded in the last few weeks or so. And I do have a floor here sitting at 275. It's been sitting in this pocket for a year, right? So the question is, are we staging a breakout from a technical perspective in general? TradeWave says, hey, potentially we could have ourselves a nice spike here. It gives us 24 days. So we should be looking for something that moves very quickly. So we look at our 28 days space. And so what in my mind, what this chart needs to do is literally burst out, have a good 10-day run or so, and then we close it wherever it's at so that we don't let it leak into where it might be going. So for me, taking a look at this chart, okay, that's not too awful. If this thing actually runs, we've got a $50 run to the upside, right? That's about 25 bucks to 300, another 25, 50, so it goes to 375. And then eventually that gets to 400, but we're not seeing anything like that. My thought would be, of course, this is me, just me trading. I am going to look for, man, it's been a long week. Okay, 325. And I'm going to sell two 330s, right? That's going to be my back ratio. I collect $3 right off the bat. So that makes my buy point, you know, a dollar, 321 and some change, right? And so if it gets to 330, I'm going to have a $9 move in that general direction. And if it starts creeping over 330, I'm going to sell the 325, 330 spread. And then I'm going to take that 330 call, roll it into December, and buy a call against it and leave it as a short call spread. That ought to be just enough for me to do whatever it is that I want to do here. I don't expect that it goes past 330, but if it does, I will be able to jockey around that. Now, this one's calling for 20, 30, 21 bucks. So again, right about that 7%. So these volatility numbers are really tracking in line with what TradeWave is saying, and they're pricing it in to the stock very, very nicely, right? So if you want to say, hey, lady, I don't want to mess with that. I'm going to buy the 320 calls and I'm going to sell the 330 calls for $200, $260. You have a monster upside, $1,000 of potential upside if this chart runs into where they're saying it's going to run. Obviously, you can see from my back ratio here, I'm not sure it's going to do that, only because, I don't know. I just think it's going to be muted. That's my general impression. Now, here's the thing. If we get a rate cut next week, and we get a promise of 2 more rate cuts before the end of the year, November and December, next week, I'm going to be looking at this. If it starts rallying really hard, I'm going to close this position. I absolutely am. It's just not going to be worth holding because the liquidity that's going to come into the market, if rate cuts occur, that's going to be big. All right. The next thing that you can do is no, I don't want to do that. The next thing you can do is sell a put spread. Love the put spread. Selling of the put spread is always great. 300 to 290 doesn't really give us a ton, but it is, $1.90. And I like that. That's going to give me a little bit more cushion in the trade. So we've got the short put, the long call, and of course you can do both of these together, making the call spread only cost you about 70 bucks, right? So you can certainly do that. And if you don't dig that price ratio, that back ratio spread, you can always build your own. You can go to the 330 and sell the 335s. I think that would end up being a debit, but oh, it's a 70-cent credit. So you can do anything that you like around those frameworks. But I'm going to be keeping my eyes on this back ratio, which I do believe I'm going to take on Monday. Once Wednesday comes around and the Fed comes out and we listen to that lingo of what the Fed's got to say about everything, then I'm going to definitely make an adjustment there if it sounds very dovish in general. So that's going to be it. So I'd like to turn it back over to you, Afshin. Maybe open it up for questions. You know, the goal is to help you see how solid TradeWave is and how I use it to manipulate options directionally, right? My goal is always, hey, can I get in very cheap? Can I have it so that if nothing happens, I make money? Can it be that if something good happens, I make money? And if it actually does the opposite, can I also make money? And sometimes it's very hard to do all of those together. This particular scenario certainly does that.
Those are my favorite trades, by the way. My last a trade I did was CF Technologies. Exactly that happened.
Love that.
It just dropped when it
Yeah, I
was
love
supposed to
CF.
go up.
Yeah.
And
But CF is a good company. You know, they
oh yeah,
they are well positioned for motion. So I love them for the long haul. But you're exactly right.
yeah. I
Seasonality
mean,
is not good to them this year.
no, but I made 5 cents. I ended up
Yes.
making
Yeah.
$50
Yeah,
on
absolutely.
or $5. I ended up making $5 on a losing trade.
Yeah. And that's the thing, right? If you can position yourself to lose the least, which is my brain is always focused on, okay, how do I lose the least? And it's not always being the most risk averse, because obviously I have a trade on that's using $5,700 of margin, taking this Autodesk position. So I'm not avoiding risk, but I am positioning myself in a way that's going to make me money. And many times, if we are extremely risk averse, we miss out on specific opportunities that sort of sit there for us from a probability perspective.
Right.
Okay, anybody have any
Very smart.
questions? Let me stop the share.
Anybody questions? Or you already know everything?
Well, Anne-Marie, if I may ask a question,
Of course you may.
you did say the four principles you mentioned. Can I get it cheap? Was the first one. The second one was if it stays sideways, am I okay? The third one I forgot, and the fourth one was if the opposite happens, can I still make money or lose the least? What was the
Yes.
third one again? I am making
Okay,
notes.
so let me go through it in my own mind. So I want it to be cheap. I want to make money if the chart does nothing. I want to make money if it moves in my direction, and I want to not lose money if it moves against my direction. So I must always be positioning myself with risk parameters in forward progress. So ultimately, if I were to reassess what I'm looking at here with Autodesk, I would move it to December, and I would use the it doesn't go in round numbers. So I would do the 320, 330, because time is always going to give me a better shot at coming out clean. So I was talking to folks earlier in the day. I was on with one of my clients, and we were talking about these short puts and how you can sell short puts and just kick them down the option forever, right? And I was upside down in a trade. I had sold the puts, stock dropped, and I just moved it out 6 months. And it dropped again, and I moved it out 6 more months. I nursed that short put spread for 3 years. It wasn't a spread, it was just
Holy
naked
cow.
puts. And I ended up slightly green when I was very deep in the money. And so it's just something you have to have patience with and go, just realize that the market has a natural bid underneath it. And if you're sitting in a strong stock, that stock will eventually recover. Now, I'm not going to sell puts in something that's not very solid. And so that's my first guardrail. I'm not going to sell puts in, some fly-by-night quantum stock or whatever, unless, it pulls down and I can make, 100% in a day. And I can do that. But in general, that's it. Yeah. You've got those correct.
Yeah, another problem with selling
Thank you.
puts
Mhm.
especially on something that has low volume is if it's in the money, chances of
You getting put to it.
it
Yes.
would be put
And
to it. It's happened to me multiple times.
that's why you go as far out as you can. The
Exactly.
probability of getting put to a stock decreases dramatically if you are more than 25 days out of expiration.
Exactly. I've made that mistake in
Yeah.
the past
Oh,
on
me too.
things.
That's how I learned that lesson.
Yeah, you
Everything I
don't lose
learned
any
is from
money,
doing bad
but
things.
yeah, I remember the first time I actually had to call Thinkorswim. I didn't know what that was. What does it mean? I have all this stock on my account.
Yes, well then, yeah.
May I ask a question?
Of course.
Uh, it- What you look for, I think, Anne-Marie, and ask, like Deck dropped a bunch today.
Yeah.
Okay, I
let's
know
take a
it
peek.
doesn't have the volume and it doesn't have the open interest, but let's say this did have the volume normally and it had the open interest. The fact that it dropped, and yet on TradeWave, if you pull up Deck, you showed it a little while ago, Deck is
It's got
projected to
bullish.
go up.
Yeah. It's
Okay.
got bullish seasonality.
Uh,
So again, the way we use these seasonality metrics is the following. Fastenal was also one of those, right? It was predicted to go up, it moved down. So when we position, where we go, oh man, that shows up, we have to remember that all of the data that we look at sits in something that looks like a bell curve. It's actually a Cauchy, right? The Cauchy distribution. So my fellow math nerd over in the corner, he knows. So this Cauchy distribution tells us that the tails can be fat the further out that we go, and the
Right.
top of the bell is a little flat. Now, why am I going through this nerdy stuff? What TradeWave says is theoretically, most of the time, this happens. So it's not a slam dunk. It's a 9 out of 10 times this happens, right? And so when you look at the metrics for TradeWave, you're going to go on the other side that shows 8 winners, 2 losers, standard deviation, that kind of stuff. The standard deviation and those win-losses tell us that in every environment, there is the epsilon event, that place where anything can happen. And so when we look at our setups, we can say, that's why I like to build them with 3 spaces. Can I find a credit spread that will pay me far away enough that it's worthwhile to take? Can I find a credit spread that can give me directional motion? That's why I use my back ratios. And can I find a debit spread that gives me upside pressure? So today is actually a perfect time to look at Deckers and say, wait a second, has this fallen into a potential sweet spot for me? So what we notice is Deckers spent the entire year. Now they acquired Foot Locker. So in the acquisition of Foot Locker, they took on a tremendous amount of debt. And so my suspicion is that debt incurrence is what is affecting their earnings today, right? Because see, they beat 182. Oh, yesterday they did it. They beat it by a mighty bit, but they acquired Foot Locker. And so they are committing to all kinds of things that they're doing to, oh no, it's Dick's that acquired Foot Locker. My bad. But when they are guiding like this, when Deckers is saying, hey, listen, we've got a guide, if the seasonality metric says, hey, this is moving, this has a tendency to move into the end of the year, then look at what's happening. 2021, it was part of the rollover, so we know that was terrible, but 2020 it moved up, 2019 it moved up, 2018 it moved slightly up, 2017 it moved slightly up, it moved down in 2023, up in 2024, and now here it is sitting here at a baseline of support from 2021 that it tested 1, 2, 3 times. My thought is this is an ideal buy spot for Deck, right? And so if I take a look at Deckers, last time I traded that was July. So if I take a look at Deckers, I'm going to say, hey, that
Do you want to
gives me,
share?
what's that? Oh, yes,
Do
I'm
you want to
sorry.
share?
I'm
Why
sorry.
not?
My shucks. Here I was on the chart. Just trying to show the chart here. And so it's come in and holding old resistance. It's tested that support 3 times, broke to a new high, had a really rough first half of the year. I think there was a big reorg, and I know there was something that happened with them for credit. So I think this is sitting in a great spot for either a short put or a butterfly that's cheap into the future. I have no idea why I've got the spinning wheel of death here, but we'll figure it out. We'll figure it out shortly. Let me close some of my memory hogs.
And when I pull it up on TradeWave, I've got it green from 2015 all the way through 2024.
Well, towards the end of the year, you can see this bump up into that space. And if it starts over here in October, it does show a rise, right? Here's the base of October where we sit right now in general, and there's the close, so that's also bullish. It looks bullish. What we have to remember with these kinds of measurement tools, they're not telling us, hey, it's a slam dunk. They're saying, hey, most of the time it does this. And so how can we position most of the time without swinging for the fences, but still giving us an opportunity for upside? Does that make sense? Am I answering the question correctly, Neil?
Yes, it's just if this had a few more open interests, what I'm saying is you could do what you just showed us the other thing, yet doing the multiple different things. If
Mhm.
this thing ever, if this is at a base, okay, and I mean to me, this is an ideal candidate, other than I don't know that we could ever get filled. But
Oh, there's plenty of volume for December. This chain is wide. This chain is very busy.
okay.
Yeah, you could use the 90.
Oh, the spread is really good.
Yeah, you could
Right,
do the 90,
that's what I was
100.
looking at. Can you do
Oh.
that quickly? Show us what you would do
Of
with this.
course, of
Does
course.
anybody mind? I'm not trying, but this is a
No,
perfect.
I actually want to trade it now.
Right, that's why I brought it up. I just want to make sure that I'm looking at it right, because to me it looked like possibly a great shot.
Yeah,
Oh.
absolutely. Let's see what the extension is on this one for the rise up. Looks like the monthly close, the monthly open was 102, and then this rise here is 120. This one moved from 82 to 115. So if this moves the way that we think it could move, option chains have $12 priced into it, right? So that's $100 on the strike. You can see that the traders are positioned at 95. A lot of volume piled in at that 95. We can do a couple of things. We can do the 95 to 110 call spread, easy, right? We can do the, so what would I do? I would buy the 100 and I would sell 290s. That's still, that would give me, if I did that, I would end up butterflying it. And I would say 68 cents. That would give me the butterfly, 100, 110, 120. I'd put an alert at 110. Remember, a butterfly makes the most money when it's at the middle strike. And if it moves over the middle strike close to expiration, it starts to leak all your profit. So no matter when that pops into that 110, you take it. Sometimes it's going to give you 300%. Sometimes it's going to give you 60%. Sometimes it's going to give you 500%, right? It really depends. This one is $1,000 upside for $68 of risk. And so that's monstrous, but it's sitting in a beautiful pocket. And you can tell from the volume today that people are like, whoa, I'm buying this. This is cheap. And so that looks to me like a really pretty place. Also, if you're saying, well, let's see if it bounces off of that area. Couple of ways you can look at that. You can say, you know what? I like Deckers. I wouldn't mind owning 100 shares of Deckers if it came to me. You could also say, hey, I want to sell the 85.80 put spread. That's going to give me $1.60. If you decide you want to get put to 100 shares of Deckers, not a big deal, right? Probably not going to break that 85 level, but if it does, it should bounce before December, right? There's very little shot that you're going to get put to that. But if you're okay with being put to it, 85, not a bad place. This chart has had, what a run these guys have had, right? I mean, they have had a run and they're stabilizing and moving themselves probably back into the 115, 130 range, especially as they come into spring and summer and all the sporting things start ramping up. But that was a great question, Neil. That was a really, really good question.
That was really good. The last 2 years, they have made 40 and 33%.
Holy smokes.
in only 48 days.
Yeah. So you want to
46
watch that spread extra carefully if you take
Yeah,
that butterfly. I really set an alert right there. Upside pressure could be pretty dramatic. And if it starts being dramatic, here's something that you can do. Let's say it starts running off like a clip. You can go down there right to where this butterfly is, and you can go, you know what? I'm going to buy the 105, 120 spread inside of that butterfly, and I'm going to collect everything in between there. It's going to give you the $1,500 on that upside pressure event, and it's going to protect this inside of the butterfly, so it's not going to eat you alive in terms of that sort of thing. So if this does start moving when we are on together, we'll sort this and take a peek at how we want to hang on to the position.
yeah. I'm actually going to place a ratio back spread the way I do it on this one, thinking that if it goes
Gotcha.
up 30 or 40%,
Oh my gosh, it's going to be huge.
I can make 500 to 1,000%.
Right. Can you
Yeah.
give us how you would do that? That's what
Yeah.
I was wondering.
What would you be looking at there? Tell me the strike you would look at,
I would
Afshin.
do at the money. I would sell an at the money
So
call.
90?
Yep.
Okay.
Sell one at 90 and then buy at 95. See what that turns out.
Okay. So you could get a credit if you bought one at 95 and then you bought one at 100. No, it would still be 25 cents. So,
Yeah, usually what I do for those,
uh-huh.
I just either I go and buy it or I would actually put it at even and hope it's gonna close throughout the day. If it doesn't near the closing, I just pay for it anyways.
Yeah, so the back ratio for December is 145, where you sell one and buy two. And if this moves up the way it's going to move, you've got unlimited upside. Literally.
Yeah, this is one of those that could make a killing, which
Yeah.
is not a great way of doing things because they don't happen very often, but once in a while they do, as long as you don't lose money.
Absolutely. Well, that one you had in Apple just a couple of months ago.
Yeah, I mean, every so often I put one and it works, but a lot of times they don't work. That's why I like to do it for credit or even if possible. So, but it's rare to lose money or much money in those because I close them long before they expire. The only time you lose money is if they don't move, which is not very often.
Yeah, that's a nice set. We will keep an eye on that.
Yeah,
We'll
this is a
keep an
great
eye on
one.
that. All right, that's
Yeah,
gonna
thanks,
be
Neil.
it for me. Afshin,
Thank
do you
you,
wanna?
everybody. Thank you.
You're
Oh,
very welcome. It's
This was
great.
awesome.
Yeah,
Thank you so much for
always fun. I'm
doing
such a
this.
geek, such a nerd. Oh,
I
Charlie,
love
bless
it.
you. Bless you.
I'm probably going to set up a meeting just for the institutional members for Monday, and we'll go through a few more of these.
Yeah, that sounds exciting. That sounds exciting.
Yeah,
All
Monday
right,
is the day
everybody.
that market makes history.
Yeah, we'll be watching for it. You called it in April.
See if it does it again.
Yeah.
It did it on April 7th.
Yeah, you called it on the money.
Yeah.
All right.
All right, guys. Have a great weekend. Thank you so
Take
much
care.
for joining,
See you.
Anne-Marie.
Thank you so much. This was very,
And
very good.
Good.
but I'll
Good.
I'll
Glad to
send
hear
you
it.
guys I'll send you guys an invite for a Monday call if you guys feel like it. I'm just going to be doing some trades, pretty informal for institutional members.
All right. Take care, everybody. I'll see you.
Hey, everyone.
Thank you. Bye bye.
Bye. Thank you.